Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, March 2nd, 2023. It's now the 1st. We start off in the S&P 500 daily chart into DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 has printed the combo and sequential by setup 9 end count. The trend factor down 1 is qualified and confirmed, along with the 50% qualified and confirmed propulsion momentum down, and that makes the propulsion 50% exhaustion down, qualified and confirmed. If this downdraft does not pan out and price turns around and heads north, a close above the relative retracement up 1 will become qualified for end of day on the 2nd. And almost everything that the markets are going through is uncharted territory, such as the ATM indicator, ATM pullback alert for the daily study, which portends an updraft soon. It takes a few bars, so it's been about 3 bars and we're getting a little downdraft. However, the S&P 500 weekly chart has an ATM pullback alert for a downdraft here. So we've had a little bit of downside, and it's only been 1 bar or 1 week. So these two could quite possibly counter each other, as I've been talking about. We'll have to see if that actually indicates the classic bull-bear struggle. But with these two levels now qualified and confirmed, it's more likely to have more downdraft, but I don't think it will amount to much. So I'm looking for S&P price to get down near the 39.06 Fortress Fed resistance from a long time ago, at least a couple months now, and then eventually break under 3,900, but not too far. So I have this line here at 3886.75, and that's pretty much right at the low of this bar and in between the open of this bar, so somewhere right in the middle of those two levels there. And you can see it has a couple of common areas here. Here's a high around that area, and then another open around that area, and another close and low around that line there for this bar on the 15th too. And the strict combo version for the buy countdown is on 6. And I just changed it to the less strict version to see if it can print a 13 somewhere around this line maybe. So we're going to make it easier to print the 10, 11, 12, and 13. The CBOE total put call ratio charts KST of the put call ratio is headed straight up. It's above 0 and headed for this first blue line here. And price in the S&P 500 is having a sizable downdraft here now. And I'm thinking because of the ATM pullback alerts in the daily and weekly charts that it would be hard pressed to hit this blue line here. So let's aim for this blue line or somewhere near it. It could look like something here. Just kind of get near it and roll over. Except in this case, for sure, we can add a green dotted line because we are definitely having a downdraft in the KST for the put call ratio is headed straight up, so I don't think that's going to be a failure like this. But I'm just betting that it's not going to get further than this blue line right there. The ROC 1, ATR2, and PPO extreme chart could show me some possible corroboration in the belief that the downdraft will not amount to much. You can see in the ROC 1, it hit this pain threshold of -2, this red line, but the ATR2 didn't do much. We would have expected a big spike like this after hitting the pain threshold. It would have been a lot higher, and instead it was actually trying to get its way into the green zone, and now it is in the green zone. So both the ATR2 and the ROC 1 are in the green zone, which states it's less volatile out there. And the PPO extreme is at -1.224, so it is kind of odd to have this like this, these two indicators acting like that, and have the PPO extreme under zero like that. Maybe it's just building up for a thrust back up to the upside. I don't know. There's just so much uncertainty in the markets, and it is reflected here in these two indicators, possibly the PPO extreme being under zero, and the ATM alerts in the weekly and daily chart, trying to pull it all together along with the CBOE put call ratios KST, and the stocks in the S&P 500 above their 20 simple moving average had a pretty big downdraft, but it looks like it's planing out. You can see in the thumbnail it's just kind of going sideways, so they could be building up for a thrust to the upside. I think there's just a lot of indecision and uncertainty in the market still, for sure. You know, it's getting near the area where that happens, and I don't believe we're going to have this huge downdrafts like over here. And the S&P 500 AD line for the daily chart here is down below this support and resistance dashed red line. It's headed for this one now. And the bearish divergence lives on between the AD line and the MACD here. So this one's pointed up and that one's pointed down for a bearish indication. RSI, as you can see in the thumbnail, is kind of going sideways. It's not exactly free falling, even though it looks like that in the main window here. In the thumbnail it looks not too bad. It's right at 40, maybe set up for a mean reversion bounce back to 50 and above. The signal line is right at 50, so it could meet some resistance here, and if it does punch through that 21 EMA signal line while it's at 50, that's certainly a show of strength. And there's no doubt that some are headed for the exits here. The on-balance volume is having some pretty big downdrafts over here in the thumbnail. You can see looks like the ROC 50 went under zero in the thumbnail over here and headed back up, so that's telling us that the 50-day simple moving average is higher than it was 50 periods ago, so maybe a good sign. The S&P 500 support and resistance levels big board chart shows the gray areas around the weekly Bollinger Band, mid-band 39 period simple moving average, middle band, the top of the cloud, the 200 simple moving average, and S1, and price in the aftermarket hours for the S&P 500 at 8:54 p.m. on the 1st is 39.37. So to the downside is the downtrend line from 0104 2022, 100 simple moving average baseline, 26 bars back concerning the lagging line, daily Fortress Fed resistance, daily channel 3 low, S2, and the bottom of the cloud. And to the upside is the trend factor down to monthly 12 simple moving average, the conversion line 26 bars back concerning the lagging line, the daily disqualified sell TDST, the weekly channel 3 low, the top of the cloud 26 bars back concerning the lagging line, the ongoing demand line, and R1. And price would have to open under this demand line level for any chance to get qualified for end of day on the 2nd. So if it opens underneath this level and closes underneath this level will become qualified. Both AD lines, S&P 500, NASDAQ 100 dailies, are under their 21 EMA signal line. And the NYSE traditional McClellan breath oscillator to get back to zero would require 2,640 advancers over decliners to get back to zero. Have a great day.